You've been pointing out 18,050 on the Nifty currently. Let's welcome Himanshu Gupta, VP Research at Globe Capital now for a technical check on the markets. Himanshu, the Nifty went to levels of 18,140, didn't sustain there. From that level, we've slipped about 90 points. What did you make of that? Or would you treat this dip that we're seeing from the top as a buying opportunity?
Very good afternoon to you, Rima. Well, I think the markets are not doing that bad, if you ask me honestly, because where we left the markets on Friday, it was 17,800 odd levels, and we were just on the verge of giving up that important support zone. So I would just like to highlight three data points here. Markets have rebounded from an important support of 17,800, which is actually a potential double bottom support for the markets. Data point 2, we were extremely oversold on the PCR, both on Nifty and Bank Nifty. And thirdly, 18,000 was a very heavy call writing as for the Friday's closing data. And today, comfortably, we are sustaining above that level. Not only that, we have seen call unwinding in the 18,000 call writers, and strong put writing is happening around 18,000 odd levels. So I think, given the fact that the markets actually ran into its 20 and 50-day exponential moving average around 18,150 odd levels, so some kind of profit booking is very much expected, and it's on the very much healthy. But I would like to believe that if we were able to close above 18,000 in today's session, there is a possibility that in the days to come we might break out above that 18,150 today's highs, and we might head higher towards 18,250, 300 odd levels. So for fresh trades, I think a dip towards 18,000 spot levels is a good opportunity for me to enter longs. Keep a stop loss below 17,950, and on the upside 18,150, 18,250 are the near-term targets for me.
Okay, all right, Himanshu. Thank you for that. That's about the index level trades that you're talking about. What about individual stocks?
Yeah, sure. So on individual stocks, first thing is that today's rally has been a very broad-based rally. We have seen participation from IT, metals, and autos. And amidst auto, I think Ashok Leyland is looking strong on the charts, and I think it's on the verge of giving us good breakout. So currently trading around 150, 50 odd levels. One can initiate longs on Ashok Leyland for target price of 160, 165 from a near-term perspective. Maintain a stop loss below 147, and the long can be initiated in Ashok Leyland. Second one is a mid-cap from a cash segment. It's KEC International. That stock has given a very strong breakout in today's session, currently trading around 511. A long can be initiated here for a short-term targets of 550, and a stop loss below 495 can be placed in KEC International.
Okay, thank you very much for that. Let's get to our segment, Midcap Movers then. Vivek is here at the big wall. Vivek?
Well, good afternoon. Well, it's a session where you're actually seeing the broader end of the markets underperform, the benchmark indices. But despite that, some stocks today are seeing quite a bit of a breakout rally. First on our list, Godfrey Phillips, today at a fresh 52-week high. In the last couple of months, the stock has actually re-rated significantly, and today again up almost 7% on very strong volumes. Kamdenu continues its surge higher, as well as IDBI Bank today. All these three stocks at fresh 52-week highs. On the moving forward, some of the stocks today that are moving up on very strong volumes. First up, we have Philatex India. After a while, we are seeing this particular stock break out with strong volumes. Ujjivan continues its move higher. Aether Industries, after a while today, up on very strong volumes, cooled off a little bit from the top, but continues its move higher. Laurus Labs today saw a very large block deal in this particular name. After that, the stock has seen a bit of buying activity. It's bouncing off the 52-week lows that it was trading at. On the other hand, some of the stocks today moving lower. Chemplast Samvar down on very high volumes today. Equitas Small Finance Bank, some profit bookings seen here. And Stuffcraft today down almost 2.5%. Again, this is on quite high volumes.
Okay, thank you so much, Vivek, for that. So those are some stocks which are buzzing around in the broader markets. For now, we'll slip into a short break, and we'll be joined by Nitin Bavasi, who's the CFO at Ajmera Realty Infra, to discuss their Q3. Welcome back. As promised, Ajmera Realty, that's the stock on our radar. The stock is buzzing in trade after its Q3 operational update. The company reported healthy growth in area sold on a year-on-year basis, with collections surging 40%. Sequentially, however, there has been a decline in area sold and value as well. It slipped around 23%. To discuss more, Nitin Bavasi, who's the CFO at the company, is joining us now to discuss more. Mr. Bavasi, good afternoon. Thank you so much for joining us. Well, it's been a good performance on a YY basis as far as the operational update is concerned. Can you tell tell us what happened quarter on quarter? What led to a decline in sales value and volumes as well? And did you see a decline in pricing as well?
Very good afternoon. Happy New Year at the outset. And as long as the quarter-on-quarter sales value basis and the velocity-wise kind of a thing, it is on the basis of the higher base effect. Because in the first half of this financial year, we had the massive launch of the very high-end product, which is the Manhattan, the next phase of the Vadala, and that's how we have seen good chunk of the velocity coming on that particular first half basis. And then after, on a consistent basis, we have now achieved the better numbers, and the cumulative numbers is far more significant as we read the year-to-date numbers.
Could you tell us what are the launches that you expect, the total pipeline of launches in Q4?
In the Q3, we have achieved 694 crore worth of the sales, and we have the robust collections of 430 crore. And to answer about the launch, we have launched one project in this Q3, which is at Juhu location, very premium location, having about 150 crore worth of the sales revenue potential. And as we move forward, we have on a quarterly basis, sequentially in about next 3 quarters, we have about 1 million to launch with about 2,000 plus crores as the sales potential.
2,000 crores plus potential is what you're looking at, expecting them to realize in how many quarters? And when you're talking about 694 crore rupees, that's your 9-month sales that you've done here. What is FY24 looking like with all the projects that you're talking about?
As I said that, we have the launch pipeline, which is very healthy, 1 million and about 2,000 plus crores over the life cycle of the projects, respective project. And happy to say that all the 3 projects at a Mumbai location. So in terms of the price point wise, it is definitely a very average pulling up the overall portfolio pricing kind of a thing. Having said, in terms of FY24, definitely given the advanced stage of the completion of the ongoing projects like Sikova, Greenfinity and Manhattan, which is now catching up kind of a thing. Juhu, which we have sold about 10% plus kind of a thing. And we have some low-hanging fruits like OC-based inventory available within the portfolio. So going forward, my sense in about FY24, we should be having the further significant growth over the sales book kind of a thing. And if all goes well, I think we are very confident of achieving 1,000 plus crores as the sales book number.
Could you give us an indication of what the average realizations are for your Juhu project, as well as expected for Ghatkopar and the Central Mumbai project, and how would it compare with same time last year? Some numbers.
In terms of the overall portfolio pricing, it is definitely much more than. However, that is because of the composition of the projects. Currently, in Q3, we have achieved 23,000 per square feet on a carpet basis for the entire portfolio. Manhattan project, which is again a very flagship and the contributing high end, we have experienced a small markup. However, that's a markup kind of a thing, about 2% plus as a quarter on quarter sequentially. Rest of the other projects, we have seen a very stable price point, and which is at the advanced stage of the completion. We are prioritizing more of the velocity of sales rather than any inching of the pricing there.
Okay, so velocity is something that you're focusing on. You are talking about big launches coming up with a potential of around 2,000 plus crore rupees as well. Since the pipeline is very strong, what does it do to your debt? What is the updated number? Will you be taking up more debt, or the collections or the cash flows from the existing project will be able to finance the newer projects that you're coming up with?
As we have been explaining on the investor community, we have good land bank, and which is going to sequentially available for the production of the next phases out of that. And for the new growth acquisitions kind of a thing, we are looking at a very low capex. So significant operating cash flow and plus other repatriation is expected from the US overseas market. These are all cash flows. Significant part of the cash flows we are utilizing currently at a deleveraging level. And happy to say that, from this peak level of the interest rate, that it is the apt time for the deleveraging and then get into the very leaner balance sheet going forward.
Okay, so what is the number when you're talking about deleveraging as well, and with the interest rates coming or peaking out, so to say? What is the target debt for you?
Significantly, we want to operate going forward below one of the net equity level. Currently, we are at 1.12. And in this quarter, we should be divulging the annual 9-month results, and wherein we will come back with the debt leveraging numbers as well.
Are you in the process of acquiring any land parcels for future projects?
Definitely, as I said, that our strategy is that of low capex acquisition, and a couple of things are at a very much at an advanced stage in terms of the documentation. So going forward, those exciting pieces of information should be also coming on the way.
Will this be Mumbai only?
Currently, yes, our acquisition focus is that of Mumbai and as well in Bangalore. But that's the the market which we believe that going to be our focus area.
Okay, so last question, Mr. Bhavisi, are you looking at any strategic partners as well in any of your projects? The last update was that yes, in one of the projects you would look for a PE funding or something of that sort. Is that on the cards?
Yes, very much. One location which is that Vadala, where we have piece of I would say the deal available kind of a thing. We are at the last leg of the regulatory process at NCLT to bring the asset into SPV, and hence we are in that piece we should be looking at PE or any strategic partnership going forward.
So how much of an investment are you looking at in that particular land parcel or the SPV?
Typically, it is a 3 million commercial development. So that depends on our once the regulatory process is completed, whether in the phases or in the one go kind of a thing, that will be that will decide the quantum of the overall investment size kind of thing.
Okay, we'll leave it at that, Mr. Bhavisi. Thank you very much for joining in. That's Ajmera Realty on their plans. Slip into a break. On the other side, in our special segment, Midcap Spotlight, we'll focus on Industar. Stay tuned.
Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Well, it's time to talk about our favorite segment, Midcap Spotlight. Rima, you're focusing on Indus Towers, trading at a discount to global peers, but still, CLSA has downgraded it.
Absolutely. So CLSA has downgraded Indus to an outperform rating. They've lowered the target price from 245 to 215. And remember, this stock has already been an underperformer. It was down 30% in the last 1 year. So CLSA has downgraded Indus despite the valuations being fairly cheap. They're saying the stock is currently trading at 4x FY24 EV to EBITDA. In the last 3 years, the stock is traded between 5 to 6 times, right? So current valuations are cheaper than their historical valuations. Also, they're saying the stock is trading at a 75% discount to global tower companies, which is at the highest level of a discount. So why has CLSA downgraded it despite the valuations looking seemingly attractive? The key reason is the uncertainty about the receivables from Vodafone Idea. Remember, in the last 2 quarters, Indus has already taken a hit of 3,000 crore rupees by writing off the provisions or receivables from Vodafone Idea, while Indus has broadly maintained that these receivables are recoverable. But till there is clarity, till the Vodafone Idea's pending fundraise happens, we still don't know whether that money is going to be repaid. So that is the reason why, despite the valuations being cheaper than historical levels, CLSA has downgraded it. What can, drive the stock to go up from current levels? One of the reasons why Indus trades at a discount to global tower companies is because telecom companies own stake in Indus Between Bharti Airtel and Vodafone PLC, they have a near 69% stake in Indus right? And remember, these tower companies are renting out towers from Indus So if you control it, then you're going to try and make sure the rent remains down, right? It's not perhaps at an arm's length, the transaction. So which is why historically also Indus is always traded at a discount. So if that stake, telco stake, the ownership comes down from the current 69%, it's a positive. And two, the big one is going to be in the near term, improvement in Vodafone Idea's financial resources, which this is why Indus Stars, it's broadly about Indus Stars and what CLSA has to say about it. But let's also talk about Kalyan Jewellers. It's in focus in the back of business updates. Manglam, looking good.
It is looking good indeed. I mean, 13% growth in their overall consolidated sales this time around in the third quarter. And this coming in on a high base of same time last year is a positive. And as far as the Indian business is concerned, that also grew by about 12% this time for Kalyan Jewellers. Marginally ahead of Titan. But remember, Titan, of course, has a much larger base as compared to Kalyan Jewellers. Now, the triggers for the company, of course, were increased studded ratio that the company is assured of has happened, as a result of which the gross margins of theirs have improved in this quarter. Secondly was increase of outlets and performance in their non-South outlets. So, the company's non-South markets recorded a higher revenue growth, so that's happening. They've opened a total of 5 new stores during the quarter, and all of them in their non-South markets, so that does well for them as well. Finally, the e-commerce business is coming off for them. So year on year, you've seen a decline of almost 5% in their e-commerce vertical, but that was also, again, understood because same time last year, we had more prevalence of e-commerce than this year, where people could actually go to the stores, etc. What works in Kalyan Jewellers' favor right now, however, is the valuation that it trades at. For the same growth percentage-wise, Titan is down 2% and Kalyan Jewellers is higher by about 3.5% for the simple reason that Titan trades at over 55 times 1 year forward earnings, whereas Kalyan Jewellers at current reckoning trades at about 27 times 1 year forward earnings, so half the valuations of Titan.
Okay, all right. So half the valuations of Titan, that's working for Kalyan Jewellers as well. But it's that time of the year or the quarter where we get a lot of updates, right? As far as the operational update is concerned, Paytm is the other one, which is buzzing on the back of its update. Surbhi's here with the details.
Hi Sonal, thanks for that. So you're right, Paytm has come up with their update and it looks like a good one. The value of loans disbursed is up 36% sequentially at close to 10,000 crores. The number of loans disbursed was also up 11% sequentially at 1 crore. The GMV, which is the gross merchandise value, is up 9% sequentially at 3.46 lakh crores. Now the monthly transacting users, that have also gone up 6% at 8.5 crores, and the total devices that were deployed was up 21% at 58 lakhs. Apart from that, over the weekend, the news has come that Paytm Payments Bank has received RBI approval to appoint Surinder Chawla as the Managing Director and CEO for the next 3 years. Back to you.
Thank you very much for that. Let's talk about the life insurance sector data for the month of December. Yash is here with the roundup. Yash?
Well, Rima, to start with, the industry has seen decent growth. So life insurance industry as a whole in the month of December grew by about 10% on a year-on-year basis. Up to December, it's up about 31%. Private life insurance companies performed even better. December premium is up 15%, premium up to December up 18%. And the retail annualized premium equivalent up 16%. It's the listed life insurance companies which faced quite a bit of problem in the month of December. So LIC, the premium grew by just about 4% on a year-on-year basis in the month of December. Up to December, it was up 40%, but that is largely because of the performance throughout the year. The December retail APE for LIC has just grown by about 3%. HDFC Life faced some problem when it comes to its premium growth in the month of December. The December premium was down about 10%, premium up to December up just by about 6%, and the retail APE was up 23%. ICICI Prudential Life, December premium grew by just about 5%. Up to December, the premium was up 10%, and the retail APE was down about 7%. Max Life Insurance, the same story again. The December premium grew just by about 2%. Up to December, the growth was seen at about 7%. Retail APE was down 10%. SBI Life Insurance, though, was one exception to this overall weak growth in the life insurance industry. The December premium grew by 30%. Up to December, the premium was up 14%. And the retail APE as well, that saw a growth of 31% on a year-on-year basis.
All right, okay, that is the update as far as the life insurance data is concerned. The markets have come off slightly more from the high. So Nifty right now is up for 176 points. It's a 0.6% cut from the top. So we'll keep tracking this for you, of course. But for now, we'll take your leave on this edition of Midcap Radar. Stay tuned. Inside Out when we return.